You've probably heard the phrase, the government is just printing more money. Sounds simple, right? Like some guy in a basement with a printer spitting out dollar bills. But, sorry to disappoint you, that's not how it works. If it was, every broke country in the world would just print their way into paradise. Instead, printing money is more like a dangerous magic trick. If you don't do it right, you don't get gold, you get hyperinflation. Ask Zimbabwe. So first, let's clear up the myth. Governments don't just open Microsoft Word, type $1 billion, and hit print. Real money printing is actually controlled by a country's central bank, like the Federal Reserve in the US, the European Central Bank, or the Bank of England. These banks aren't just printing cash for fun. They have rules, systems, and way too many economists with glasses debating about interest rates all day. And fun fact, in the US, most actual physical dollar bills are printed by the Bureau of Engraving and Printing, not the Fed. The Fed just decides how much money is supposed to exist in the system. Think of the Fed as the boss and the printers as the workers. What printing money really means. Now, here's the crazy part. When economists say printing money, they don't always mean paper bills. Most of the time, it's just numbers on a computer screen. Yup, digital magic. If the US government wants more money, the Fed doesn't roll out printing presses. It just types numbers into bank accounts. Boom! You have $500 billion. That's not a joke. That's literally how it works. Like in 2020, during the COVID pandemic, the US printed trillions of dollars to keep the economy alive. They didn't print pallets of cash like in a movie heist. They just added electronic money into the system. So if you thought the government was out here with giant printers running 24/7, sorry. It's mostly a keyboard and a very confident enter key. But what about actual paper money? Okay, but yes, physical bills still exist. Somebody does make those. In America, that's the Bureau of Engraving and Printing, and coins are made by the US Mint. They design, print, and ship out cash. And these bills are not cheap to make. It costs about 7 to 17 cents to print one note, depending on the denomination. So technically, it costs about 17 cents to make a $100 bill, which means the US government has the greatest profit margin in history. Sorry, Apple, you lose. But here's the punchline. Printing cash is only a tiny part of the money supply. In fact, over 90% of money today is digital. It's just numbers in banks, not paper in your pocket. So if most money is just numbers on a screen, how do central banks decide how much to create? And why can't they just print more and solve poverty forever? So we learned governments don't actually print money like they're running a copy shop. Most money is just numbers on a screen, which sounds amazing, right? Like, why not just type a few more zeros and make us all rich? Well, that's where things get ugly. See, when you create more money, but there's not more stuff to buy, congratulations, you've just invented inflation. It's like throwing a pizza party, but inviting too many people. The pizza didn't get bigger, you just made the slices smaller. That's what happens with money. The more dollars floating around, the less each dollar is worth. Remember Zimbabwe in the 2000s? They printed so much money that they had $100 trillion bills, and that still couldn't buy you bread. Imagine being a billionaire and still starving. That's what too much printing does. Why countries still do it anyway? So if it's so risky, why do countries still print money? Because sometimes it works, short term. During the 2008 financial crisis and the 2020 pandemic, governments printed, digitally created, trillions to keep the economy alive. It's called quantitative easing, which is just a fancy way of saying we're making more money appear and hoping nobody panics. And for a while, it kind of works. Businesses survive, people get stimulus checks, the economy doesn't collapse overnight. But here's the catch. The more you do it, the weaker your currency becomes. That's why your dollar today doesn't buy what a dollar bought 10 years ago. Inflation is like a silent tax. It eats your savings while you sleep. So central banks have to play this impossible balancing game. Print too little, recession, unemployment, economy shrinks. Print too much. Inflation, hyperinflation, money becomes toilet paper. It's basically like walking a tightrope, except the rope is on fire, the wind is blowing, and millions of people are shouting, "Fix the economy already." That's why economists look so stressed all the time. So next time someone says, "Why don't we just print more money and end poverty?" you can say, sure, if you want to pay $50,000 for a burger, money isn't valuable because of the paper or because the government prints it. It's valuable because people trust it. Break that trust, and your currency is basically monopoly money. So yes, countries do print money, sometimes on paper, mostly on screens, but it's not free. Every new dollar comes with a risk. The real question is, do you trust your government not to screw it up? And hey, If you learned something today, or if you just like making fun of economists, smash that like button, subscribe for more money myths busted, and drop a comment.